Welcome to the latest Motley Fool scoreboard. I'm on in Chocobaloo. We've got longtime fools Dan Kaplinger and Jim Gillies giving a 1 to 10 rating to the impressively resilient eBay, ticker symbol EBAY. Talk about the business first, including factors like industry and competition. Certainly a very competitive space in online retail. A 10 is invincible. A 1 is hopeless. Dan's at a 6. Jim, you're the bull here with an 8.
I am, and I say the proof is in the pudding. It's been written off as a poor man's Amazon for nearly 2 decades. The auctions that made them famous are arguably irrelevant as people prefer buy it now. They managed to survive some truly idiotic capital allocation moves over the past 15 years, and mostly 10 years ago now, and yet they're still here today. They're the second largest online marketplace outside of China. They were the unwanted piece in the PayPal spinoff a decade ago. And yet, if you pull up a chart, you'll find out that eBay has outperformed both the market since that spin. They've also outperformed the much sexier PayPal by nearly 200 cumulative percentage points. So I'm sitting here saying, put a little respect on eBay's name.
Yeah, I can't dispute any of Jim's points on it. I just say from a user standpoint, I used to use eBay a lot, both buyer and seller. I don't anymore. Platform's just unusable. And the eBay fees, really usurious in my opinion. It's just made it financially unviable for me to use the platform. I think that, you've seen some fees go from like 2 to 3% up to 12 to 13%. Just doesn't make sense anymore.
Well, let's talk management, see how you fall there. A 10 is Warren Buffett. A 1 is Homer Simpson. Both of you have 7s, Jim.
Yeah, management here has been perfectly acceptable. It's been a succession of professional management teams over the past couple decades. No rock stars, but just kind of Goldilocks, not too hot, not too cold. Again, I alluded to some capital allocation blunders of the past. They sold Skype too cheaply. They sold Mercado Libre, which they used to own 18% of it. They sold it at all. That was dumb. And they rehomed cash to pay taxes right before tax reform was enacted. And those are all prior management. So that the current guys are in what I call the no rock stars group is just fine by me.
For financials, a 10 is a fortress. A 1 is yikes. Dan's at an 8. Jim, you're at a 9.
Yeah, I mean, the only thing keeping it from a 10 is the fact that growth isn't great. Margins are great. eBay has been a cash monster for a decade. Over the past decade, they've done about $21 billion in free cash flow. Over that period of time, they've knocked out 63% of their share count, costing just shy of $40 billion, plus another $3 billion in dividends. The difference between those numbers has been financed by the sale of non-core divisions. They sold StubHub for $4 billion right before the pandemic. They sold their classifieds group less than a year later, and they took back part of the sale price in equity, which subsequently went up, which they sold at a profit. The balance sheet has basically as much cash and investments as debt. Just overall, aside from lacking the revenue growth, there's nothing not to like here.
Yeah, I'm pretty much in the same boat. I just ding the company 2 points instead of 1 for the lack of growth. I love cash cow businesses. eBay's definitely qualifying there. I would just prefer to see more growth than what we're seeing in order to give it a higher score.
It's pretty phenomenal what Jim was talking about, that after the spinoff, eBay's outperformed not only the market, but PayPal. Not many of us would have predicted that at the time. Dan, let's talk valuation. How well will eBay's stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
I'm giving eBay 5 to 10% returns, consistent with my views on what the overall market's likely to do. Safety score is 7. I think the risk here is, eBay has a history of doing this. I think maybe they'll continue to try delving too greedily and too deep on their fees in order to try to up their take rate even higher. At some point, I think there's going to be a seller revolt if that happens. But I'll admit, I've been wrong so far. In my view, I would have thought that the seller revolt would have happened by now.
Yeah, I've got a bunch of stuff I've got to sell on eBay, so I should probably get it out there before they do up their fees. I'm thinking it's about a 5 to 10% as well, returns going forward. My safety score is higher. I mean, the safety is, I have a 9. My reason for the valuation and the expected returns is, look, share price is at an all-time high. They're pretty close to relative valuation highs over the past decade. Did I mention there's a lack of revenue growth? Without that, without that growth, I can't see valuation getting much more generous from here.
Thanks to both Jim and to Dan. They've given eBay a solid overall score of 7.1 out of 10, but with mediocre returns expectations from here. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Fulgent Genetics. Till then, Fool on. You don't invite Hannibal Lecter into your kid's birthday party and expect it to go swimmingly. Good job, Dan.
I was going to say, hang on, wait a minute. I'm Hannibal Lecter in this story?